All right, let's dive in. Today, we are going to completely change the way you look at financial data. We'll be walking through the Finmagine Financial Chart Builder, which has this awesome 4-step workflow that's built to help you make way faster and, honestly, much smarter investment decisions. So let's get right to it. You know the feeling, right? You're just staring at this wall of numbers, endless rows and columns, and you're trying to figure out the story that's hidden in all that data. It's just classic information overload, and it can totally freeze you up. And that right there is the exact problem this tool was designed to fix. It's built as this super streamlined 4-step journey that takes you from all that raw, confusing data to a really clear, confident decision. So here's the game plan for today. First, we're going to see the big picture by visualizing key trends. Then, we'll get a super quick diagnosis with a financial health score. After that, we get to play detective and figure out the why behind those numbers. And finally, we'll tie it all back to the question that matters most. Is the price right? Let's jump into step 1. Our journey starts with step 1, visualization. Because really, before you can analyze anything, you have to see it. And the Charts tab, well, that's your command center for turning those dense tables into clear, intuitive stories about how a company is doing. And what's so great about it is how versatile it is. I mean, look here. On the left, you've got this deep historical data for an Indian company on screener.in. And on the right, we're looking at a global giant like Uber on Google Finance. The exact same powerful tools work perfectly across both. Okay, let's break down what makes this so powerful. First off, the tool is just plain smart. It automatically knows to use bars for absolute values, like revenue, and lines for percentages like profit margins. This all works thanks to a dual y-axis, which lets you compare totally different kinds of data in one chart. You can also click on the legends to turn data on and off, so you can focus on what you really care about. And my favorite part, a huge time saver, is metric persistence. You set up your favorite metrics once, and boom, they're waiting for you when you look up the next company. And this right here is a perfect example of that dual-axis system in action. Here on Google Finance, we're seeing Uber's revenue as bars measured in billions on the left. But then, layered right on top, you have the net profit margin as a line measured as a percentage on the right. Instantly, you can see the relationship between their sales growth and how profitable they actually are. It's all in one clean view. Now, a quick but really important pro tip on managing your charts. You're going to see 2 options, Clear All and Reset Preferences. Just think of Clear All as a temporary reset, just for the company you're looking at right now. Your saved favorites, they'll still be there for the next stock. Reset Preferences, on the other hand, that's the full factory reset. It wipes the slate clean, so use that when you want to start over with a whole new set of default metrics. Okay, so we've seen the trends. Now it's time for step 2, getting a quick verdict. This is where we go from just observing to actually diagnosing, using the Quick Analysis tab to get an instant health score. The best way to think about this tab is like the dashboard of a car. It takes all the complicated stuff from under the hood and boils it down to one simple number, a health score from 0 to 100. But even more important, it gives you these green lights for strengths and red warning lights for concerns, telling you exactly where you need to focus your attention. And the best part is, you're in the driver's seat. You can actually tune this analysis engine to match your own investment style. So, are you a safety-first person looking at stable, blue-chip companies? Then the conservative preset is for you. Or maybe you're hunting for the next big growth story. Well, the aggressive setting will be a lot more forgiving. It puts you in total control of how you view a company's health. Now, a really key thing to remember, this powerful tab is exclusive to screener.in. And the reason for that is pretty simple. The health score algorithm needs over a decade of really detailed financial data to do its job properly. It's looking for long-term trends, and that depth just isn't available on Google Finance. Okay, we've got our health score. Now for step 3, which is all about understanding why the company scored that way. This is where we move from the dashboard to the real diagnostic tools. The huge advantage of the Calculated Ratios tab is what we call universal coverage. Because it calculates over 11 key ratios directly from the company's raw numbers, it works for any company on screener.in. Yeah, even the small ones that other tools don't cover. This makes sure you can always do a deep, fundamental analysis. And the absolute star of this tab is the DuPont analysis. You see, it's one thing to know a company has a high return on equity, or ROE. It's a whole other thing to know how they got it. And DuPont breaks that down for you. And this is absolutely crucial, because not all high ROE is created equal. Imagine 2 companies, right? Both have a 20% ROE. DuPont might show that one company gets there through amazing efficiency, high margins, turning over its assets really quickly. But the other company, it might get there by just taking on a mountain of debt, which inflates its numbers. This one breakdown tells you instantly if the company's profit is driven by quality or by risk. So this brings us to the final and, let's be honest, the most important step, connecting all of this analysis back to the stock price. Is all that quality you found actually reflected in its valuation? This slide just nails the core question perfectly. The Price Analysis tab compares a company's long-term profit growth to its long-term stock price growth. What we're trying to figure out is simple. Is the stock lagging behind its actual performance, which could be an opportunity, or has it gotten way ahead of itself, which signals risk? And the tool makes this super easy to interpret with these color-coded badges. A green catching up badge, that's often a great starting point for value investors because it suggests the market hasn't fully appreciated the company's profit growth. And on the flip side, a red running ahead badge is a huge warning sign that the stock's price might be more about hype than solid fundamentals. So we've walked through the whole four-step analysis. Now let's talk about putting it all into practice and mastering your workflow, because there are some really key differences depending on which platform you're using. Okay, for Google Finance, this minimize restore cycle is absolutely essential. See, Google Finance only loads one financial statement at a time, so you have to follow these steps to switch your data source. You minimize the panel, you change the view on the main page, wait just a couple seconds, and then you restore the panel. It will automatically grab all the new data for you. It's a neat little trick. So here's the bottom line on the workflow differences. Think of Screener.in as your all-in-one deep dive machine. All the data is on one page, and you get access to the full four-step analysis suite. Google Finance, on the other hand, is your go-to for incredible global charting. Just remember to use that minimize restore trick to switch between statements, since you'll mostly be using the Charts tab there. And there you have it. We've gone through the whole process, from visualizing the data to diagnosing the business, and finally assessing the price. The entire framework is now in your hands. So the only question left is, which company's story are you going to uncover first?